Okay, everyone, please just let me know that you can hear me and that you can see the chart. Welcome to the webinar, and then we'll get started right away. Just a few of you, let me know you can see that. Great. Hey, Bob, nice to see you in the room. A lot of my friends are here. Hey, Brian, nice to see you. So my name is Lee Goldstein. I am the trading director at 10minutetrades.com. And I'm here today. I first want to thank Mark and Rory from Right Line Trading. I'm personally excited to see what Mark has up his sleeve today. He's got something new and really interesting with biotech stocks. I know a lot of my members and people in my trade room have been talking about it all morning. So I really want to say thank you to Rory and Mark. If there's anybody smarter than Mark, I haven't met him. So definitely stick around, and I'm sure what he's offering and showing you is going to be fascinating. So I'm not here to sell you a single thing today. I just want all of you to go to my website, www.10minutetrades.com, and give me permission to email you somewhere down the road. And for doing that, I want to give you something free also. So I'm going to use this short webinar today to teach you something that I do that helps me to make money on a regular basis. And basically, I just want to give you something for free every week if you come to my website and sign in. Okay, so that's it. No selling, no classes, no nothing. 10minutetrades.com is exactly what it sounds like. We spend less than 10-minute trades in almost every single trade that we take part in. So first, we'll go through our earnings disclaimer. The name of our software is JOBB, and I'm sure that's how a lot of you out there know us. And any and all the trades that I'm going to discuss today are for educational purposes, and I do not make investment recommendations in any securities. We don't provide financial, tax, or legal advice. Of course, you can lose money when you're trading electronically. It can be substantial. Be careful when you trade. Make sure it's right for you and your financial resources. And please just quickly read through this CFTC rule so that you understand what can happen. I have to show you this stuff, but the beauty of all of the trading that we do is, fortunately, more often than not, our members are making money. This is not a get rich quick scheme. That's not what we do. We have members that sometimes make thousands of dollars on a single trade, and I'm going to show you their screens, their real screens. But the reality is many people lose money. And you hear the old wives' tale, 80%, 95% of all traders don't make money. And it's not for all the reasons that everybody says. I think it's really simple. People that don't make money are looking for something that doesn't exist. They're not willing to put in the time, and they let one or two bad experiences sour them on this system that they're trying to learn. So they wind up jumping from system to system, guru to guru. They never get set on one or two things that work. And honestly, they just wind up never having a place to call home. Our trade room is home. Rory's trade room, Mark's trade room is home. We work together because we feel we have two great places that you can be a member of, both of us, and you could trade my trades on a schedule, and then you could trade with Mark in his trade room. So we're not conflicting with each other. We work really well together. But the key is, if you don't give things a chance, if you just throw your hands up and give up because you have a couple of bad trades, you're never going to be a successful trader. You've got to take the good with the bad. You've got to be able to pick yourself right up after a losing trade, put a smile on your face, be optimistic, and move on to the next thing. And I'm going to show you today something that's working for me and the people that come into our trade room. We call them members, but they're more than members. The people that come in our room are our family, and they know it. And Brian knows it here, and Dave M, who's here, knows it. We really treat our members like family, and that's the absolute truth. But just remember, trading's risky. Don't afford to trade. what you can't afford to lose. So what we do is something called appointment-based trading. Used to be more popularly called news trading, but it's expanded now. It's really, I'm just talking about schedule your week in advance. We're going to give you a free tip sheet every Sunday so that you can make your appointment with the market. And that's why I want you to go to our website. Go to my website. We're going to give you that free tip sheet so that you could spend a couple of minutes every weekend setting up your schedule, and then all during the week you can pick and choose what trades you want to trade, whether you want to test them, whether you want to trade them live. But I want to challenge you to get my tip sheet, trade some of the trades in simulation mode, and you'll see that we are the real deal. We're not kidding around. We study this stuff and we know what works and what doesn't. So this is an example, a very short example of what our weekly report looks like. We now call it weekly market movers, 10-minute trades. A lot of people, like I said, used to know us as thenewstraders.com. And the reason that I bring up our old names is because I want you to Google me. When you Google us, you won't find any bad things about us because people love us. We treat, like I said, we treat people really great. So we're now called 10-minute trades. We've rebranded, we've created a new website, updated so many things, and we're in the middle of doing more and more and more, which is, you got to move forward in anything that you do to get better and better, and that's what we're trying to do. So every week we send out this schedule. We send out this schedule on a Sunday. So the idea is you'll know the week in advance all of the events, all of the appointments that you're going to make with the market that coming week. I'm going to show you the WASD report. That was last week's report. It was quite interesting, to say the least. We have an end of the day trade that we are still testing, sort of. We trade it sometimes, we test it. But these are all appointments that you can make with the market and trade. And what we do is teach you how to trade them. But like I said, we're going to give you this for free so you can practice on your own, do the own style of trading that you like to do. Here's my weekly schedule this week, the real deal. This is what we've been doing all week. And today we had preliminary GDP this morning, pending home sales, the natural gas report, the 7-year note auction. Tonight there's a report, Australian building approvals. And then tomorrow, keep in mind tomorrow is sort of a holiday because of Labor Day, going to be pretty low volume. So I'd be careful on anything I do tomorrow anyway, no matter what system you use. A lot of people are not in the markets. But this is what our weekly report looks like. It's fantastic. And we make the schedule every week. Don't try the link, it's not going to work. But these are just 1 week. If you multiply that by every week, you're looking at about 30 to 40 different appointments that we make with the market every week. And some of them are amazing. Some of them are okay. They're always changing, but we only trade live the ones that are performing well. And that's the key to what we do. People say, hey, what's your track record? How much did you make? Can I make a living doing this? It all depends on if you do things properly. Our reports rarely, in other words, besides having this weekly report, let me backtrack. I'm on a very short period of time, so I'm going to go fast today. You can always email me also. If you have a question, just email me at help@10minutetrades.com, help@10minutetrades.com, and I'll answer your questions. So we have a weekly market mover, which has a list of all the appointments we make during the week. But then we break it down to a daily set of market movers because now we want to cover the specific trade so that you know exactly how to do the trade. So we have, for instance, this morning we had preliminary GDP. We tell you what time to enter the trade. We tell you if you're going to cancel the trade if it doesn't activate in 10 seconds. We give you a preliminary targets, 2 of them, and we give you a preliminary stop. We also have information going back 18 months at least on how much this particular event has moved in ticks in the market. Of course, what time it takes place, what market we recommend trading, the level of risk. And then we also have a little journal, a little what I call a mini trade journal of the last 6 reports that this particular event, the way that it behaved. If it behaved really well, then we're probably going to trade it live in our trade room. If it was inconsequential, then we might not trade it. Mo, I see your message. If you need help, I will help you. Okay, so I got your message, Mo. I will help you. All right, I promise. And I'll give you an email right now, Mo, that you can reach me later if you need to. In an emergency, you could reach me at this email. Sometimes things happen, so don't panic, and I'll take care of it. But I hope you can see that. It's Joe Brackett Breakout, support@joebracketbreakout.com. You can send me an email there, and no matter what, I'll make sure that I take care of your problem, okay? No matter what, anyway. But look, things happen. He said he wasn't receiving a report for some reason. So one of the issues, and everybody should be aware of this, is that the ISPs are being incredibly difficult about delivering legitimate business emails. They are considering every company to be a spammer. So one of the issues that all the companies like us are having, and I'm sure Mark and Rory are probably struggling with some of the same issues, sometimes the emails that we send you, which are not anything relating a spam email, but they're informational and important to your subscriptions, they're being considered spam by the ISPs. Comcast in particular, very difficult. Gmail, unbelievable how difficult to get emails through. So what you want to do is any company that you do business with, whitelist their emails. If you don't know how to do it, just Google whitelist an email, and anybody that you want to have contact you, make sure you've whitelisted their email. Because I'm telling you, Mo, that's the problem you're having. I've been sending you the reports, but they're not getting through because Gmail is stopping them. So we'll figure out how to deal with that. So again, 10-minute trades, weekly market reports. You get your report on Sunday. You get your daily report that covers each event. It tells you how to trade. Like I said, I'm not selling stuff today. I'm just going to show you results, things that happen to our members. And I want to explain something about one of my favorite reports, that one of my favorite appointments with the market that I make and that I'm making money on. Every Tuesday, I make an appointment with the market for a trade, a report called the API report. A lot of people don't know about it. They've never heard of it. They have no idea what it is, but it's very similar to the Wednesday oil storage report. It's a very impactful energy report that actually you can subscribe to also if you have a bunch of money you want to spend and get the report a couple of minutes early. But we've discovered you don't really need to spend that money. Even though it's subscribed to, that particular report doesn't get affected very much by the fact that it's subscribed to. The beauty of sometimes making an appointment with the market, and this was the fun of what I wanted to cover today, is sometimes you'll make an appointment with the market and you won't have to do a single thing. So let me explain what happened on this API report before it takes place so you understand. A lot of times over the years, I've been assuming that everybody understands exactly everything I've shown them over the years. And I finally realized that a lot of people in this room are new. You've never traded before. You might not know what I'm talking about. You might not be able to tell that a particular trade was even profitable. If you look in this area here, it's a little hard to see, but it says $110 in green. So before I started this appointment, before I even started trading, I had made $110 that morning on a different trade. So keep in mind, when I'm done showing you this trade, it's going to be $110 extra than what I actually made. Now, the API report, we have a very, very specific way that we trade it. We tell people exactly how to trade it. Our software allows you to do that. It allows you to set targets, stops, brackets. Right here where you see my arrow, and I hope you can see it where I'm circling, that's the current price at that time. It's 4:30, almost 4:30 on Tuesday. This was just this Tuesday past. This report came out last Tuesday at 4:30. More often than not, what'll happen is the report, it'll make a little move, it'll do something, it'll make $10. I'll have to exit manually. But every now and then, which is the beauty of appointment-based trading, let me show you first the beauty of a perfect trade. So I came into the trade room about 10 minutes before this. I set up the trade for everyone. We use an 11 tick bracket. That means above and below the current price, there's going to be an X, which is our order. It's called a bracket. A lot of people don't even know what that is. It kind of looks like this. All right. The bracket is a buy and a sell above the current price. That's going to help enter us into the market. So watch what happens, and I'll explain it as it takes place. The news comes out. You could see the first thing the market tried to do is scare us out of taking the trade. That was an abnormally big move before a trade, which sometimes would say to us, hey, everybody in the room, we're going to not take this trade. It's too dangerous. There's an abnormal move, probably better just watch it, don't take it. But I know this trade. I also know the WASD trade's been doing this a lot. That's a grain trade that we do. And I thought to myself, you know what? I'm not going to cancel this trade. I'm just going to trade it, and we're going to let it go and see what happens. Our stop is the same every time we trade it, 19 ticks. So I'm risking $190. My target is 29 ticks. So I'm looking to make 290 for a risk of 190. Here's the trade. Watch what happens at 4 o'clock. It's the index, which is oil. It's an energy trade, is moving around. I was $110 in the positive. Now the news is out. Now the trade's over. That's how fast it was. It hit my 29 tick target. You can't even see my target. It's off the screen. It was so far away. And the trade was over in less than 7 seconds. I'll show it to you again. Ignore everything on the right. We tell people, put a bracket of 11 ticks on the chart. And that's what this is right here. That's my bracket. This is the current price in here. When the news comes out, I couldn't care less if the news is bad, if the news is good, doesn't matter. All I want is the news to be different from what's forecasted. And we call that the news offset. So you want a good sized offset. A good sized offset usually equals a nice move in the index. It just so happened that on Tuesday, the offset was monstrous. They were expecting, watch it one more time, it just explodes to the upside. That's oil futures exploding to the upside, and there's a reason why. There was a drawdown. there was a usage of oil of 11 million barrels when they were expecting just about 3 million barrels to be used. That is a very, very large difference in what was expected in the news and what was received in the report. So you could see our bracket appeared. We were pulled into the trade. You can't even see our stops. The trade was over. It was a nanosecond trade. It says 2 seconds, but it was over faster than that. Okay, that was our API report from last week. $290. I only traded one contract because the other thing that I like to do in our room is I like to trade the way the normal average person would trade, the way you would trade. Most of you are not trading 30 and 40 contracts. And by the way, I see people with their hands raised. Just shoot your questions. I'll see them and I'll answer them as we move along. Okay, you don't have to raise your hand. I can answer them as we go. But I like to trade in the room what I call small. I want to trade and I want to show you what it's like to trade like the average person would trade. Most people don't trade with 100 contracts or even with 10. Most people trade with 2 to 4 contracts. Their account sizes are somewhere between, $5,000 and $7,500. Just so you know, we trade futures and we trade using the Ninja Trader platform. We have a software program that's called a strategy, and it installs into Ninja Trader. So now let me show you a different kind of API trade, because I'm going to just concentrate on the API report today. I'm going to teach you how to trade it. So this report comes out Tuesday. So the second thing I'm going to do is I want to show you the specific trading report for the API report. Hopefully I'll be able to find it. If I can't, I'll just explain it to you. So it's called the DMM, okay? We call it the Daily Market Mover. And I'll show you, here it is. Our members get this report the day before the trade, and that's so they can prepare for the trade. API, weekly crude oil trade, it has a risk of 3. We go up to 5, 1 to 5. We tell you what market to trade. We give a little bit of history about the report, how many ticks it moved. We talk about the exact specific setup. Now, I have a slightly updated version of this report that I want to show you. Give me half a second, because I really like the way that we wrote this up. Here is my updated version of this report. I explain exactly how to trade this report, and I wanted to teach this to you today. So now remember, this takes place at 4:30 every Tuesday. You could trade this manually with any platform that you want. If you have TradeStation, you just create an 11 tick bracket above the current price just before 4:30, 16:30, 4:30, okay? You use an 11 tick bracket. So you put a bracket 11 ticks above the current price, and you put one 11 ticks below the current price. If you don't get filled, if nothing happens in 30 seconds, you cancel the trade, because 9 times out of 10, although these days it's probably 8 times out of 10, you're going to get filled in a couple of seconds. I only use one target, a target of 29 and a stop of 19. And then I explain specifically how to trade this report. This report has a very specific method. If it has a fast profit, we double click. I'll read this to you while I show you based on that trade we just watched. It'll make it easier to understand, because I'll be able to point things out about our software. If it has a fast profit, now this is a fast profit, watch. It's going to be so fast, I'm going to see if I can stop the video in time before it finishes the trade. If it has a fast profit, and what that means is if it goes beyond our entry point, okay? And I'll be able to show you, take a second. Our entry point was this line right here. The second that you, this little square right there, or that circle, the second you see the price go above that entry point, our trading method says double click the break even button. It's BE on our platform. And what that does is it moves the stop to break even, protecting your profit. It's a specific, very safe way to trade this report. That way, if it goes profitable, you double click that break even button and you just protected your profit. Now, if it keeps going up, you can trail manually into the price. So let me see if I can give you an example of a slower moving API report that will give us an opportunity to trail. So give me one more second. I know that last week's API was pretty good also. So today is I believe the 13th was all right. Let's take a look. Let's see what happened on the 13th. So at 4:30, there we go. Perfect example. What happened is our entry is this red and black square. The price went down into profit. You could see it's 15 ticks profitable. You then click the break even button and it moves the stop to this area here, which is where we entered. That way, as the trade, if it keeps moving down, you can manually trail. If you don't get stopped out, if it kicks back on you, now watch, I'm going to keep moving down, move down, move down. That's a one contract trailing method that we use on a lot of reports, a lot of appointments in the room to trade as low risk as possible on a report that might be able to make you more than $200 on one contract with a lower risk because you're only risking one contract. These are things that we teach in the trade room. To give you another example of another trade that was awesome in the room, we trade the WASD, the grain report. Very, very popular report. Last month, which is really only a couple of weeks away, let me get the right report. I can't escape this API report. It won't leave me alone. The WASD was 8/12, August 12th. It's a noontime report. So let's say you're at work and you can find a nice quiet little room to trade in with a laptop. You only need about 10 minutes, not even. So right before noon, we set up the software. And once again, we're going to tell you how to set the software up. Okay? We want you to know what to do so that when the trade comes, you know how to trade it. And we send this to you the day before. It's a 4-tick bracket, not like the API. The API was an 11-tick bracket. It's a 58-second entry. So it's a noon report. So we get our orders onto the chart at 11:59:58. If it doesn't fill in 20 seconds, we cancel it. Now, I know for a fact that lately, because we study this stuff, lately the WASD news has been late. I don't cancel in 20 seconds. I override the report and we talk about it in the room. Most of the time, the 20-second cancel has been perfect. But just recently, the WASD report has been changing a little bit. So we tell our members, hey, if you don't want to miss this trade, you might want to extend your cancel to about 45 seconds. And I'm telling you that there's been at least 3 trades over the past 6 months that we profited on that would have been canceled if we used the 20-second cancel rule. That's one of the great reasons why people should come into our trade room if they're going to do this. We use a target of 8 ticks, target of 18 for the second target, and it's a stop of 10 ticks. And then a lot of people go, oh my goodness, I'm scared, I'm worried. I don't know how to trade corn. I never traded corn before. I can't do that. That's impossible. But if you think about it, corn is no different than trading the YM or trading the S&P 500, the mini S&P, the ES. And in fact, corn is exactly like the ES. It's $12.50 a tick. It's 4 points for $50. 1250 times 4. It trades just like the mini S&P. So just when you think you're scared and just when you think you're worried that you can't do something, you find out that it's just like something else you're used to doing or that you want to learn how to do because you heard it's fun or interesting. There's no reason to be afraid. Education is what defeats fear. So the trade rooms are the places where you get your education. Colin asks, can you do micros? We have a trade that we've been teaching our members at the end of the day, Colin, that does the micro ES, very, very low risk. Um, they invented, and I'm not joking when I say invented, the brokers are looking to make money. The exchanges are looking to make money. They want to get more people trading, and they feel they can get more people trading by making the risk lower. So they invented something called the micro ES. It's the MES. So instead of being $12.50 each tick, each little price move, it's $1.25. So it's much lower. You can trade it in smaller accounts. So Colin, absolutely, as long as there's enough volume and liquidity on the micro that you want to trade, then the answer is yes. The micro ES has plenty of volume and liquidity. And all that means is, are there enough people trading it so that when you place an order, prices don't get skipped over? They go in order. If there's not enough liquidity on an instrument like copper late at night, might be very, very low liquidity. It might be trickier to trade because your entry prices might not be as good as they would be if liquidity is higher. So when you hear that the liquidity is high, that's a good thing. When you hear that liquidity is low, that's a bad thing. Not a bad thing, but it's just something you want to be more careful of. So absolutely, you could do the MES. The RTY, Colin, I'm not sure the volume's that great yet. I think the MNQ, the mini NASDAQ MES is probably viable. But really, the thing is, you can do your testing. Ninja Trader, which is the platform that we use, and we do use futures, like I said, has a replay feature. So you can test things. You can, if you download the data, level 1 and level 2, then you can actually open up a dome and you can see the previous liquidity, the date that you want to replay. So it's very possible to do what you're asking and to check yourself. So here's that WASD trade. This was an awesome trade also. I had no money in the bank before the trade, and the WASD just exploded to the downside. Now, keep in mind, farmers right now are really struggling because of the trade war. So we were kind of expecting that the plantings would be down. That's one of the issues that this report covers. So I was thinking short, but something happened in this trade that in all the years that I've been trading, I have never seen. The market moved so much that it froze. There are a couple of markets that have something called limit up and limit down. It's a protection in a market so that a market doesn't go haywire In other words, it doesn't move too much to the upside or too much to the downside without some limits. So they call it limit up, limit down. It protects the market from crashing or exploding an irrational amount. The WASD trade was so big and so large that the corn market actually reached its lowest level, and those levels are set by the exchange. You can know in advance what the levels are. If you're not greedy and you set your targets so that they're quite far from those levels, then it should be safe for you to trade those types of instruments. I mean, I've never even thought about a limit trade being reached. To actually see it might be a once or twice in a lifetime thing. It does not happen often, but it was such a huge move that the corn market actually freezes. And what happens is it doesn't open again until the next day when the next market period begins. So anytime you're doing anything, if you're riding a motorcycle, you don't want to ride if you don't know how to shift the gears. If you're trading, you don't want to trade if you don't know what the rules are. You're not going to trade if you don't have enough money in your account, right? So if you can't hear me, doctor, I mean, you're not going to be able to see what I say. I assume that everyone can hear me fine because I can see my microphone working. So let me just type in for him. If he can't hear, log in and log back, log out and log back in. That almost always solves the problem. Okay? So that's his problem. He can't hear me. Sometimes it happens. But so again, we trade these weekly appointments. I want to show you real results that our members have been making. These are not 80-year-old trades. Brian, who happens to be in the room because I see him, he trades in the UK. He made over $300 on one of his recent trades, trading an appointment with the market. He's probably going to be mad at me for showing his money, but you don't know his real last name. Another member, real trades, these are real screens, $800 trading private capital expenditures on the Australian dollar. Absolutely real money. You could see that I've crossed out the account numbers. Another member trading the API made $400. Another member traded CB Consumer Confidence, $1,100. That's a recent report. And just so I'm totally transparent, he traded 10 contracts on that trade. That was a reasonably large amount of contracts. Most people are probably trading 4 to 5 contracts. They would have made $200 to $300 on that trade, which even still, nothing wrong. This was my trade on a Friday gold trade. I traded 3 contracts. I made $160 on a trade, but I can tell that it was a 4-second trade by looking at the clock. This happens over and over. We have certain appointments we make with the market that are regularly profitable. This member made $1,800 on one of our appointment trades. $1,800, no joke. One trade in a matter of seconds. ISM Manufacturing, which is a popular trade, a member made $1,300 on that trade. These are real. I can't stress how many times people love sending us their screenshots. Quarterly grains, $125. Not everybody makes thousands, but think of it this way. If you have 5 or 7 trades that you love, 5 or 7 appointments you make every month because they repeat, it's not like it's always something new. Many of them repeat every month. You could make $120 times 7. It's not a bad thing to make $7,000 to $1,000. No, Dirk, it loses. It has losing trades. I would be a liar and a fraud if I didn't tell you the truth. I had a losing trade this afternoon. The market moved so fast that it just stopped me out, even though it looked like it was going to work. I lost $100 on the bond auction today. So, no, you got to have losers. Um, and the losers are going to be as big as the amount of contracts you're trading. I was only trading one contract on that report because that report doesn't have a great performance record. So, Dirk, I can't give you a winning percentage because you're going to trade differently than I trade. But I will tell you this, we give a prime trade class. We have 7 trades every month that we call our prime trades. And we have a special class that we teach just how to trade those 7 reports. They are 75% profitable over a year, meaning over 7 out of 12. It's really 8 out of 12 or 9 out of 12 of the reports are profitable. Now, sometimes the profit might be $40, but sometimes it might be $500. The WASD report that I just showed you, I made $500 on that report. That's a prime trade. But I could lose $500 on a report also, but I could also make $120 on a trade. We have a lot of little trades that don't whipsaw. They don't move up and down. They generally go in one direction. Sometimes they don't fill. So the worst that happens is sometimes there's no event. But we have a lot of different methods, a lot of different ways also that we can trade events. We have more than 4 different setups built into our software. We can trade by time ranges. Jerry asks a great question. Are any of these trades market open trades? Jerry, if there's anything that I dislike more, I hate to say it, but it's market open trades. The inconsistency of market opens is very, very difficult for us. Um, we would prefer to trade after the open because if you look at the NQ, we tried for months to get a good NQ market open trade, and we just were never happy with it. There's just too much up and down movement. We're much more oriented towards that instant move, like that API I showed you. That's much more common in the type of trade that we take. So look, folks, I'm running out of time. My purpose here was I taught you how to trade the API trade. 11 tick bracket, get ready for the trade a couple of seconds before 4:30. Use a target of 19 ticks. Use a stop of 29 ticks. I'm sorry, reverse that, a target of 29 and a stop of 19 ticks. Give it about 30 seconds to fill. It'll fill most of the time. And then use that one contract. Get your stop to break even as soon as you go into profit. So all I want you to do today is I hope I've just whetted your appetite that this is something you could be interested in. I promise you, it's something you can do. I am not a professional trader. I'm not a professional financial advisor. I'm a regular guy. This is me. Let me see if I can get my picture up here before I go. That's me. I'm a musician. I'm a songwriter. Why should you listen to me? Because I've been doing this for years and years and years. Appointment-based trades, you're in the market for seconds, couple of minutes, it's over before you know it. And we want you to do one thing only. Go to my website, www.10minutetrades.com, sign up for our free weekly report, test them on your own. You'll see that I'm telling you the truth, and you'll opt into our website and allow us to send you other interesting offers so you can learn to do this and make money doing it as well. So any last questions before I go? I promised Mark I would be 45 minutes. I'm 45 minutes exactly. Do I have any last questions? So remember, you have to use NinjaTrader as your platform, and we're trading futures. Dennis, thank you. You're a fellow keyboard player. Dirk, thank you very much. I want to thank all my members that are here. How much does it cost to trade? Betty, that depends on your broker, but it's not expensive. It's a couple of dollars per contract, okay? But you have to buy data. You buy monthly data. And that's true for any trading that you do. If you're going to trade stocks, you have to have the stock data, but it's not any more expensive than being a stock trader. It's a couple of dollars per trade, Betty, not anything exorbitant. The last big question that people ask, isn't slippage going to ruin your trade? Well, we've learned over the years that you have two types of slippage, positive and negative. It all washes out and winds up being some trades have more slippage than others, but some trades move a lot and overtake the slippage. Sometimes slippage gets in the way. It's basically a wash is what we've learned. But Betty, to answer that question, it's not expensive to trade, a couple of dollars. Dennis, do I recommend using funded trading accounts for beginners like Top Step traders? Dennis, that's a really difficult question for me. I think, why not just spend your time using your own simulation account, spending less for data, and just learn on your own? But if you don't want to, you could certainly use something like Top Step Traders, or I forget the other one, the Gauntlet is another one. I just think that everybody is selling a dream, you know? We're all out here selling a dream. You want to pick the dream that is attainable. So what I would say is do your research and see if the dream that's being sold is really attainable, or if it's just a dream that's looking for fees and things like that. That's how you want to make your decision, in my opinion. So I'm not saying don't use Top Step, don't use the Gauntlet, but I'm saying do your research. Don't count on me to answer that question for you. Um, I know traders that use Top Step successfully, and I know other traders that couldn't take it because the fees were too high. So that's the honest truth. You want to make that decision for yourself. See what you would rather do. You could certainly open a free demo account with NinjaTrader for 2 weeks. They give you data, and you could learn to trade that way as well. Either I personally learned that way, and I like doing it that way. Any other last questions, folks? I don't want to step on Mark's toes. Rory, do I need to do anything to give this over to you? Because we didn't really set anything up. So I don't want to shut anything down or do anything. I want to just remind everybody, go to our website. I see that Mark is taken over. www.10minutetraders.com. Please opt into our website. And I'm going to turn it over to Mark and thank Mark and Rory so much for the opportunity that they gave me today. And thank you, everybody, for sharing time with me. So I'll see you in the trade room. Mark, it's all yours.
Hey, thanks. Hey, thanks, Lee. I just have to say one thing about Lee. He's really the most honest, forthright guy. His software is stupendous, and he's just a terrific guy to work with. I mean, he tells you like it is. He's really straight, and that's why I really like to present with him, because he just provides just this measure of integrity that you just don't find very often in this business. So what I'd like to introduce you today is to a very, very unique service. You're not going to see this offered almost anywhere else. I'm going to give you the introduction, then I'll just tell you a little bit of a history about it. But I feel it's quite unique and quite different. And at the end, I'm going to give you, if you stay to the end, I'm going to give you my next pick that's going to go into our micro cap and small biotech portfolio. Now, let me just read the disclaimer that all signals and trading opportunities provided both orally, written, or electronically that are disclosed to visitors or subscribers are for educational demonstration purposes only. Right Line Trading takes no responsibility for any participation by visitors or subscribers within the futures or forex markets or for any profits or losses that may be incurred. Everyone knows that participating in trading futures, forex, or stocks can involve substantial amounts of risk. So you have to be careful. Consider your financial position before you make any trade. You have to do your own due diligence and consult a financial advisor. And we are not registered financial advisors nor licensed commodity trading advisors. Now, the reason I think this, these are just some of the reasons I think this is such a powerful system. First of all, it doesn't take a lot of money because I'm going to be giving you picks. They're going to be either micro caps or small cap biotech stocks. You're not going to be looking at Amgen or looking at a big cap. So you can trade them in an IRA, you can trade them in a small account. And the formula that I use is really ignored by 99% of investors because they don't have the logistics that's required in order to engineer these trades. And you're going to see it's really a team effort. And you're going to see the team that I've assembled in order to create trades that have a very high potential for success. And everybody wants to get a small micro cap stock that's going to skyrocket or we believe is going to collapse. I mean that's a potential dream because for a relatively small investment, you can reap a 300 or 400% winner. And I give it to you straight, and that's the truth. I'm going to show you a 400% winner that I had, and that's because these companies, what we're looking at, are companies that are creating new medicines. They're basically engineering new molecules, very oftentimes to treat diseases that currently have no cure whatsoever. And in doing so, they really literally burn through billions of dollars of cash. So they have to have an enormous pile of money to start. And it's a very long process from the first development of a new therapy to actually sending that new therapy into the pharmacy so you can get it via a prescription, or your doctor can prescribe it for you in the hospital. These companies are working on cures for cancer. They're working on cures for AIDS. That's why it always kind of makes me laugh when I hear, that the government has a cure for AIDS that they're hiding. The fact is that anybody who created one would be literally sitting on a company worth billions and billions of dollars. So everyone's rushing to make these therapies available to everybody. And like I said, it takes an enormous amount of money. Now, the testing process is very rigorous and it's very strict, and it goes through a 9-step process that I want to familiarize you with. Now, the first step, and I may have these, I don't. The first step is the discovery of the molecule. Maybe it's a new medicine for the treatment of pneumonia. Maybe it's a new therapy for a treatment of cancer, of a specific type of cancer. Maybe it's the treatment for a disease that right now has no cure. And you know what the big one is right now is Alzheimer's disease. There is no cure for Alzheimer's. And you've got multiple companies moving through the process, trying to find that treatment. Whoever comes up with it is going to go from a small biotech to a company worth $150 or $200 in price. So those are the type of therapies they're working on. Recently, there's a disease called cystinuria. It's a disease where your body lacks an enzyme to break down the amino acid cysteine. And so cysteine accumulated in your blood, it's toxic to your kidneys, and ultimately you wind up dying from this. And there was a recent biotech who came out with the first powerful therapy for the treatment of cystinuria. The company skyrocketed. It wasn't a medicine that I was tracking, although I was aware of it. And when they got approved, that stock went nuts. And I'm going to show you some approvals. So then eventually they apply to the FDA for an investigational new drug IND. And what they do is they begin early clinical phase 1 trials. Now, without the IND in the preclinical development stage, the medicines are basically tested on rats and mice, and in petri dishes. There's no human testing allowed until you get an IND from the FDA. And once you do, then you go to phase 1, where the company tests the drug on healthy volunteers who don't have any disease. In fact, a prerequisite for being in this study is that you're healthy. And what they're really looking for here is to determine the safety profile of the medicine and the potential toxicity profile. So it's done on a small number of people, or in this case, they once they're accepted, become patients. And the purpose, again, is to get a dose ranging feel and determine where the toxic level is. But it's not done or utilized to treat the disease. Now, this is a great way. You can get on a mailing list, and I know people who make money this way. They're relatively healthy, but they're lazy people. They don't want to work. And what they do is they get on they get accepted into a lot of these phase 1 studies. They take the risk because you get paid for this. And they get into this phase 1 study, and they get administered the drug. It's not a long study. It only takes several months to a year to complete, which is really in the testing stage, very short. And approximately 70% of companies who develop these new medicines or molecules advance past phase 1. So phase 1's not a major milestone. It's not one that we're going to recommend buying a biotech on, because it doesn't really move the price of the stock at all. Most companies do get approval, and it doesn't mean much, because in no way are you looking at therapeutic efficacy of the medicine. Now, phase 2. Now, following the success and approval of phase 1, the companies move to phase 2, just step 5 in that arrow. Now, in this portion of the approval process, the drug is administered to up to several hundred patients actually suffering from the illness. And this test is done to determine the effectiveness and the side effects of the drug. Now, this trial usually takes anywhere from a few months up to 2 years. Most of these trials are 2 years or close. Because if you go to the FDA to look for a phase 2 approval too early, they'll send you back with a postponement telling you they really can't evaluate the efficacy or toxicity of the medicine until more time has passed. Now, phase 2 is essential in gauging the effectiveness and the future of the drug, since it's the first time the company has actually tested the medicine on patients suffering from disease. Now, the odds on the approval here are substantially lower. I wrote cut in half, but they are much smaller. So if you take all the companies that begin, you're now down to only about a third who pass and get approval on a phase 2 study. And a phase 2 study, a lot of traders believe is a non-event. But from my experience in doing this, it's a major event. And a phase 2 study will cause the stock to skyrocket. Because if you can show significant efficacy with a lack of toxicity in, say, 100 patients suffering from Alzheimer's disease, and we can use that as an example, although there are lots and lots of examples we could, that stock is going to take a major ride up. And then the momentum investors are going to get involved. It's going to overshoot its price. But if you're in it before that phase 2 study is announced, you're going to really be sitting pretty in that stock. Phase 3 is the one phase that every single investor agrees is the one that's going to skyrocket price. I'll tell you, a lot of traders and a lot of investors don't believe that phase 2 is a major milestone. I do. And I'm going to make recommendations based on an FDA decision on a phase 2 medicine. But the phase 3 approval is really the killer. I mean, this is the one that can take really $1 stock and take it to $50. And I kid you not, because there are very few medicines in the course of a year that get phase 3 approval. These are novel, brand new therapies that are going to wind up in the pharmacy and be able to be prescribed to you. So if a small biotech has a huge pipeline, but no approved medicines, and this one's scheduled or slated to bring in a significant amount of revenue, it's going to really take that stock up. And remember, if they bring one phase 3 medicine if they get approval on one, then the company is looked upon as having the potential for bringing multiple other medicines in their pipeline through the phase 3 process. And that's a big deal. I mean, all of a sudden investors take the people doing the work in the company very seriously. And it's a very hyped process because, as I said, success shows that there's a major promising future for real life application for the drug. And essentially, for many medicines, it's the last of the trials. Now, if you create a medicine in which there's already a therapy, you can go to phase 4 in which you look to prove that your medicine is better than the one that's out there. That's going to take the company up a little bit, but that's going to take years. I mean, if you ever heard of the Framingham study, where a lot of the cholesterol lowering medicines, the statin drugs were compared, simvastatin with all the other medicines, that took 10 years to complete, to decide which of the statin medicines was the most effective, which decreased your HDL cholesterol, which lowered the actual incidence of heart disease. So we don't even need bother with phase 4 studies. Like I said, many companies don't ever do them because there is no other medicine on the market. And if they do want to proceed to phase 4, it's going to take them an enormous amount of time. Phase 3 is the big enchilada. And this is where the study medicine is administered from everywhere from several hundred to thousands of patients suffering from the disease and illness. And this is a major cash burning study because I wrote billions of dollars in revenue. Maybe it's hundreds of millions. It really depends on what you're looking at. You know, if it's immunological therapy that requires monoclonal antibody production, you're looking at billions of dollars. If it's a simpler molecule, you're looking at hundreds of millions. Either way, it's an enormous undertaking. And to gather up all of these patients, you got to float this study to hundreds of hospitals in the United States and literally create an overseeing board, and do a tremendous amount of data gathering. It is really a major, major event. Now, I wrote it takes anywhere from 1 to 4 years. Usually it takes closer to, it's closer to 2 to 4. You can't do this study in one. And the success rate obviously here is even lower. Only 25% of drugs make it past this phase. So out of 100 companies, we're only left with 5 that are ultimately going to pass the phase 3 study. Now, there's a lot of ways we can play the phase 3 event. And hang on one second. We can pass the phase 3 event. One is, now, companies, after discovering the cure, then go on for 4 to 7 years testing the drug's effectiveness. Again, I'm talking about cash burn and all the period of time it takes to get past 1, 2, and 3. And it is a make or break event. And I've been involved and done a lot of research on companies that come to phase 3 and then completely blow it, and they wind up going bankrupt. So there's the potential, if you have a small biotech, 50-cent or 75-cent stock, and the therapy doesn't show any efficacy at all, you're going to wind up with a stock worth nothing. Now, that's not often, doesn't happen often, but it happens occasionally. And one company that comes to mind was a company that was investigating a medicine that was supposed to, excuse me once, was a company that was investigating an intravenous medicine that would decrease the death associated with septic shock. Now, septic shock is where, like, you get bacteria in your blood, and it's really total cardiovascular collapse and multi-organ system failure. And once you go into septic shock, the probability of dying is extraordinarily high. Can't give you a percentage, but it is way up there. And what they did is they created a medicine called interleukin-2 receptor blockers. They felt that the interleukin-2 molecule was a major component of septic shock, and that by blocking it, they could ameliorate its deleterious effects. It didn't work, and the company went belly up. So it really is a major, major event. If it's successful, you're going to get a killer appreciation in stock value. Again, I mean, the company really could double or triple in value from a phase 3 approval. And if they're denied, the company can go right to zero. And as you know, the odds are not in your favor. So there's 2 ways we're going to make money off a phase 3 trial. One way is that there's a high probability that as soon as the FDA announces the date where they're going to come out with a decision on a phase 3 study, investors start accumulating the stock. And a large percentage of these stocks start to rise in price into that phase 3 decision. That's a much lower risk way of making money. And they do consistently and reliably, with a fixed date from the FDA, appreciate in price. Now, if you hold through the phase 3 announcement, that's where you can make your hundreds of percent amount of money. Trading into the phase 3 is smaller profits, but the risk is much more controlled. Trading through phase 3 is where that you're taking a little more risk, but you're looking for a major profit here. So let's look at the aftermath of a phase 3 report. So since the phase 3 approval process is the backbone to oftentimes the whole company and the drug, there's a lot of hype around it. And like I said, traders accumulate stocks in lieu of a positive report. Now, I consider these to be bets because they're not really, a lot of these traders don't care about the ultimate outcome of phase 3. They just know what I know, and that is that a lot of traders accumulate into phase 3. So it becomes, or stage 3, so it becomes a self-fulfilling prophecy. Everyone seems to know that this is a major event, which could cause a major appreciation in stock value. So they buy into it. And the thing is, very few hold through it. So I'm just going to give you some examples. Here's one stock with a phase 3 approval. It's ZGNX, and it was trading about $9 a share upon release of a phase 3 report acceptance. It went up $42 overnight. That was a 466% gain. You can't see that anywhere else, except even if a company's been bought out. And I had a company like that in our options portfolio, Pivotal. It was purchased. I forgot the company that purchased it. It doubled in price. This is the only place you're going to see a 466% gain. That's real, not just baloney. The stock went up 1,084%, and this is AQXP. I didn't bother to go into what molecule it was and what the purpose of was, because it's too much detail. I don't want to bore you. Excuse me. It was trading about $11 a share. Phase 3 report, it went up to $56 a share, 509%. I'm not hyping it. You get a phase 3 approval, you're going to get 200 to 500%. Now, these are picks that I took. This is AXSM. I thought I'd put more information in it, but I just wanted to show you. We're in at around $1.94, out at $16.80, 404%. This is MOBQ. I'm still holding MOBQ, and I shouldn't be holding it, but I decided to hold it. We're in at 7 cents. It went to 24 cents. I didn't calculate a percentage. I'm continuing to hold it, an appreciable profit, but I should have sold it and recommended it be sold. And here's KSHB that went from about $2 a share to over $8 a share on a phase 3 approval. Enormous profit. Now, I wanted to show you the other side of the coin because it's only fair. There's also catastrophes. This is AXON, Axon. Again, I'm not going to go into detail about the medicine that was given a phase 3 denial, but you can see it literally decimated the company. $25 down to $1 and change. It was trading at 28. It went down to 5 in the next few days, and you can see when it went down even lower than that. Here's another company, Celgene. That's a big company. And Celgene got really beaten up on EpiPen, if you remember, when Hillary Clinton decided that they were bilking patients on manipulating the molecule and continually coming out with new patented medicine not letting it go into the generic stage. Now I think Celgene's down to about $32. I haven't checked it in a long time. Oh, that's Mylan Labs. You know, not Celgene. That was Mylan. But Celgene got this denial. This is a big company, so it only went from 150 to 82. But that's a big knock upside the head. It's a 36% loss on a big company that's going to take a couple of years to even get close to going back up to where it was. If you're holding, it's going to be dead money in your portfolio forever. So you can see that there's tremendous risk involved. So there's two ways that we can profit from this. The first is phase 1, 2, and 3. We know about the money, and we know that the stock is going to rise in price before the phase 3 hearing and actual decision. So the backbone of our more conservative investing strategy is to buy really early and ride that appreciation up. Now you're going to be looking at maybe a 10 to 15% capital appreciation on the stock. You're not going to be getting 100% or 200%. Because again, it's that self-fulfilling prophecy. And remember, there's a lot of hype around a phase 3 study. There's a lot of press releases. These companies go to a lot of biotech investor seminars and meetings. Obviously, they're going to talk really, really strongly about their approval potential. And they're going to seduce people into coming aboard. And the stock is reliably going to rise in price. Now, it's not 100%. I mean, I want to be as straightforward as I can, but it's a very low risk, high reward trade if you know a little bit about the medicine. If you just willy-nilly buy the announcement of a phase 3, you will not get that almost guaranteed appreciable rise in price. Now, there's a couple of newsletters out there that recommend just that. And I've listened to them. And what they do is they recommend that every time you get a phase 3 date from the FDA, you simply buy the stock. And I've personally seen a lot of these stocks do nothing, or they fall in price because they don't know anything about what the medicine does and what its chance is for getting an FDA approval. To take this much, much further than this. And there's a service out there that's very expensive. I think it's $2,000 a year. And all they do is recommend buying into phase 3 announcements, and every stock's going to rise. That's just not the case. So we can do that, or an exit before the results are released, or we can hold through the study. And if we do get an approval, we're going to we're going to rake it in. And you saw some of the trades that I recommended, and those trades, 400%, 500%, great announcements. Now, I'll tell you about that in a second. Now, here is what you need to do in order. I'm not going to go through all the statistics again. You know that basically 1 out of every 20 companies are going to get a phase 3 trial approval. So the odds, if you just go with every phase 3 potential trial, that you're going to get shellacked. So what you have to do is you have to have a lot of information. And what I do is there's a lot of information out there. You have to do a Nexus Lexis search. You have to do a thorough investigation of all the literature, and you have to work with specialists. I work with 3 professors at the University of Miami School of Medicine, and we go and assess the probability that an experimental medicine will get a phase 3 approval. And that's the evaluation I send out to you. Now, this is going to increase your chance for a huge winner appreciably. It's also almost going to, it's not going to guarantee, but the probability that you're going to get a rise in price on the stock into the phase 3 announcement is extraordinarily high, because we've done our due diligence and we believe that we're looking at one of those 1 in 20 companies that's going to get a phase 3 or stage 3 FDA approval. In these guys, we have a hematologist, oncologist, an immunologist, and a gastroenterologist. All 3 of them are brilliant, and all 3 of them look at the medicines that are specific to their field. Those are where the big medicines are coming from. You know, in oncology for cancer, in immunology, and gastroenterology, big medicines. They're also able to make really good assessments of medicines for cardiovascular disease. The one addition we need is a neurologist for drugs for the treatment of Alzheimer's and central nervous system diseases. But between all of us, we make a really good assessment as to what's going to happen. And that's what the recommendation is really based on. So you can keep track of all the hearing dates. Now I want to go on to tell you this. I have yet to pick a trade that has lost money at the end of the day. The biggest problem that you have, which no one else is going to tell you about, but it happens, is that the FDA will announce a phase 3 date, and let's say, you know, the stage 3 or phase 3 date is September 15th, and then all of a sudden on September 13th they say that they're going to postpone the date, and the date's going to be in November. Well, that's going to cause the stock to fall in price. That's the one caveat and the one variable we cannot control. And remember that who sits on the FDA? A bunch of bureaucrats. And what do they do all day? Is basically, you know, take 6-hour lunches. Over the summertime is the worst. We're sitting with 4 medicines right now that have simply had their FDA phase 3 studies postponed. And we have quite a few winners. One, I only made 1%. And that was, I just closed it out because the phase 3 study was put off for so many months that we'll come back to it and revisit it. I'm not going to hold it forever. So that's the one thing. But we can usually exit these positions usually for a small profit. I just exited another one where the FDA phase 3 approval was put off indefinitely for God knows what reason. And we exited, I think, with a 4 or 5% profit. So it's not risky. You just got to get out right away if the postponement date is really significantly prolonged. And that's something I didn't have to tell you, but I want you to know. And the summertime, which is passing now, is the worst period of time for FDA postponements. You know, if somebody gets a hiccup, you know, they all go home and they will postpone the date because they're under no pressure. They are under significant political pressure in certain areas, and one of those are pain management. And that's the recommendation I'm going to give to you, is a pain management medication, and I'm going to show you how we're going to play it and how I'm going to recommend it. So if we come out and feel that this medicine has a very, very high likelihood, 75 to 80% chance of a phase 3 approval, you can play the trade one of 2 ways. And that is, you're going to buy it. It is very likely to appreciate in value, not astronomically, but it should give you a nice solid winner. And then if you want to really take a shot, you're going to hold through the phase 3. If you hold through with our backing, and we're giving these to you from a bunch of brilliant people, and I'm excluding myself from that, you're going to grab the 400 and 500% winners. And these stocks may be $1. to start. There was one that was 6 cents that went to 25 cents. That's a huge appreciation in price. Now, I'm going to give you the recommendations as to when to get out and to when to get in. I mean, if you want to just trade the phase 3 announcement, I'm going to give you an exit. And if you want to trade through phase 3, which I almost always do on the medicines that I recommend, the rest of us are just going to hold tight, hope for an approval, which I believe we're very likely to get, and watch and see how far the stock runs. Now, there was one stock we're holding in the portfolio that got a phase 3 approval for a medicine to treat pneumonia that was acquired in the community, not hospital-acquired pneumonia. Now, the stock appreciated overnight 27% in value, and I recommended to hold it. And I think that was a mistake because the Momo investors got hold of it. They pushed it past 30%, and then it came right back to its original price. But the reason I wanted to hold it was because it's coming up in October or November for another phase 3 review, which I have strong belief is going to get approved, which I think is going to take the stock up 200 or 300%. What I should have done was sold it plus 30 and then bought back, but I never thought it would come back this far. We're still holding at break even. We just lost an opportunity to make money. So it's not as easy as it looks. And a couple of other services that do this make it seem like it's just cake. You know, phase 3 approval, buy, price appreciates, you make tons of money, and that's the end of it. It's not. It takes a lot of work and a lot of management. Now, in addition to these recommendations, and I'm going to give you one at the end of this webinar, and I'm telling you, I'd recommend that you trade it because I'm going to trade it. You're purchasing the service for 6 months. And the other thing that you can always do, but I don't strongly recommend it in most situations, is you can buy either the stock or buy a call. The reason that buying a call is riskier, but you can do it if you have a smaller portfolio. And remember, they're thinly traded stocks. Some of them don't have options positions, but if they do, they probably have small open interest. And in addition, if you're holding the stock and there's an FDA postponement, you're not hurt. The stock is may depreciate in value a little bit, but that big payola, that big payday, still there. Your call may expire worthless, and you don't want to buy a long-term call. And since these stocks are so cheap for the most part, you're usually going to want to buy the stock. Now, the position I'm going to recommend is a rare recommendation to buy a put. I'm going to show it to you. You're also going to get, these are the bonuses, my recommendation for the best pot stock to buy now. I've done a lot of work on it, and I want to move into the pot stock arena because I think there's a lot of money to be made and a lot of money to be lost. You just have to know the right companies to enter. But this is without a doubt, in my opinion, the best pot stock. And then I created an 11-page report that you can read about FDA fast lanes. Now, if you happen to be holding a medicine that's up for phase 3 approval, and then it gets approved for a fast track, you're going to get your 300 or 400% before the FDA even makes the approval. That's like, you wake up in the morning and you're in heaven, but you're still alive. Because they only fast track drugs that they believe are going to be approved and also in which they're under tremendous political pressure to get out to people because it has tremendous clinical value in terms of treating patients. And a lot of these orphan drugs, like a medicine to treat cystinuria, will oftentimes get a fast track lane because everybody who has the disease right now is dying from it. So the FDA doesn't want to sit there on this stage 3 or phase 3 decision while people are literally dying every week from it, when the likelihood of getting an approval is high. So they're going to get fast tracked, and you're going to get a skyrocket. I want you to be able to read about it and understand what a fast track and fast lanes are, because there are multiple different fast lanes. And then I'm going to give you my top 3 big cap biotech stocks. And these are not stocks that you want to trade. I mean, I believe that these are great stocks to hold in a long-term account for capital appreciation. They all pay great dividends. And, so if you're 25 years old and your time horizon is 20 years and you want to diversify your portfolio with biotech, a couple of these are going to be the stocks that you want to you're going to want to go with. And you're going to get monthly. We're all going to sit down together. We're going to have monthly strategy and educational sessions. And they're going to be very, very good. We're going to go over all the phase 3 medicines. You're going to learn a lot. And it's open chat, and everyone can talk about their trades. And, remember, on a phase 3, some traders can ride it all the way up. Some can ride it up just into the report. Now, in addition, no, I'm sorry, that's it. So it's normally $1,000. It's only $297. And the first 10 orders are going to get all my options picks. I call it my options alert newsletter. And I want to always want to be humble, because the market is a humbling instrument. Just when you think you've gotten it beat, it like gives you a kick in the butt that really it smarts. But I'm a really good options trader, and our options portfolio is really doing outstanding. I take every trade I recommend. I mean, as a matter of full disclosure, if I recommend the trade, I take it. And I recommend an exact entry price, an exact exit price, and I do a tremendous amount of due diligence on every position. And I can tell you right now, I'll tell you a few of our spreads. We're holding a Sony spread. Sony is doing awesome on the spread. We're holding a spread on Crown Castle International. It's doing great. I just got into Cisco Systems. It's early, but it's strong. I just got into Comcast, and now today I tried to get into Nike, but I always look for a 1 or 2% pullback, and market gapped up, and we didn't get into Nike, and Nike flew, and I still may chase Nike. I'm going to have to see. But we didn't get into Nike, and I'm looking at another company called Myocardia. I'm not going to trade as a biotech, because it's $54 stock, and it's a little too expensive to recommend as a small biotech. So I'm going to put it in the options portfolio on a bull put spread, because it's got a lot of volatility. So let's sell it and keep the net credit. We couldn't get that either, because it went up 4.25% today. So I couldn't get into either one of those. So that's the additional service you're going to get if you're one of the first 10 orders. And the cost of the whole thing is $297. Now, I have a whole bunch of honest, real testimonials. I won't waste your time with them, but I mean, I have traders who have made a lot of money in one day on one recommendation because it connected. And here's the recommendation. Here's the stock that I'm going to recommend to you, and it's going into the portfolio, and I'm going to put it out on Monday. Just because in this one, there's no huge rush to get in, but I would get in the next couple of days. Now, it's a company that is got is up for a phase 3 decision of a medicine for chronic low back pain. And the candidate, it doesn't even have a name. It's called Nectar 181. Now, the problem with the drug is it's an opioid analgesic. And you know what's going on in this country with opioids. I mean, there's an opioid epidemic. So the FDA looks really askance or askew at any medicine that's opioid based for pain management of any kind, because you can already use 100 different opioid-based medicines to treat chronic low back pain. Now, this one seems to be better. It has less addictive properties. It has a longer half-life. But if you have chronic low back pain, you're going to be on this medicine forever. I mean, when does chronic low back pain stop? Just the fact that it's chronic tells you it's going to go on for years. So again, what you're doing is you're creating pharmaceutically induced addicts. So they are not so crazy about approving any opioid-based medicine right at this time. And they're under tremendous political pressure not to do it. So already the FDA stage 3, phase 3 has been put off once, and I believe it's going to be put off again. Now, it was scheduled on August 29th. It's been postponed again. So the longer the investors are left in the dark, the better, because I believe that this company is going to really depreciate in value. And in addition, based upon all the information I've accumulated and my discussion with my 3 colleagues, we don't believe it's going to get FDA approval. So we're recommending on buying a put. You can buy the stock short. There's no doubt about it. But I think the best way, we're going to get a decision sometime in September. That's never an absolute guarantee, but it's very likely that we will. And you can buy the $16.50 put or the $17 put. Do your own due diligence on the position you want to take. But I think the probability of Nectar falling significantly is very, very high. And I just want to, always remember that the trades carry considerable risk. But I believe that this risk is controlled, and we've got a really great opportunity to make really good money. There's decent open interest at these levels. They're decent puts to buy. And I think that traders are looking at this position on the short side rather than the long side. I think it's very unlikely the FDA is going to approve the 700th medicine to treat chronic low back pain. I just don't think it will. Now, even if it has a marginally better safety profile, it still won't approve it because of the political pressure it's under. Because of the opioid epidemic. So that's my recommendation. The only you in this webinar are getting. I'm not sending this out in the news. And if you come aboard, you're going to get this one and all the other ones. And this one is going to go out over the weekend. Because Nectar's just kind of sitting around. It's going to start to plummet. So that's it. So let me see if there are any questions. I hope I didn't make this too wordy and cumbersome, but it's a topic I really love because if you really understand what's going on, you do a lot of due diligence, you do a lot of reading. I have access to the University of Miami Library, and I can do a Nexus Lexis search for free. So all I got to do is submit it, and I can submit it over the telephone. They'll pull every single article ever published in the world literature in any language on that medicine. And I'm telling you, in that literature, along with 3 other professors who are very, very knowledgeable in this area, we come up with a very, very good idea of whether we're going to get approval or denial. And if we don't, we stand aside on the medicine. And you're going to see lots of medicines come up for stage 3 approval that we don't put in the portfolio one way or the other. And it's because it's just too difficult to call. And when they're too difficult to call, we're not going to give you that position. So let me see if there are any questions. Hope I didn't bore a lot of you to tears, but this is a really unique way of making money. And with a little bit of money, you can really take a position and make a real home run. Or like I said, you can trade it conservatively. I like to hold through the stage 2, phase 2 study, because you got a better likelihood of success, and you're getting at a really nice bump in price. So let me go through and see the questions. Hang on 1 second here. I know some of these are going to be for Lee. Okay. Now Lee, I'm trying to remember what time Lee stopped. Okay. Okay. Now, I don't know if this question's for me or for Lee about the winning percentage or profit factor. Right now in our closed positions, our winning percentage, honest to God, is 100%. I have not taken a losing position. Now we have 4 open positions that are awaiting that phase 3 approval. And this will be a 4th. This will be a 5th. But I have not closed out a losing position yet. Okay, these are for Lee. Okay, these are for Lee. You know what, Eric? The number of phase 3 trades typically in a month is very variable because it's up to the FDA. Like over the summer, there weren't that many. Now, I believe going into the fall, there should be a significant number. Now, and remember just, the last thing I'm going to add, and that is there's a lot of medicines going up for phase 3 approval that we're not going to take a position on because they're too hard to call. I mean, I don't want to make a buy or sell, take a long or short position on a medicine that we can't come up with a very, very strong opinion regarding its approval or denial. So there's a big slice of them that we're never going to bring. I'm never going to bring to your attention. I'd say you're going to get 5 to 7 recommendations a month. I mean, that's an estimate. Now there were less over the summer, but that's always the case with the FDA, because the FDA takes their vacations and they leave, just like Congress goes on vacation. So I think that's about how many you're going to get. You're going to get plenty. The renewal price for the subscription, Lee, something I don't even know. But listen, you've got 6 months, and the renewal price will be on the buy page. So you got 6 months. This isn't like this is not like a 1-week subscription. So if you don't like it, you got 6 months before you get any rebilling. And you could just simply call us if you think the price is too high and say, cancel, I don't want to renew. And then if you really love it, come back and say, okay, let the renewal go through. We don't want to rebill you unless you want it. And if it bills you by accidentally, we would return your money anyway. If you call us up and say, you know what, I forgot, I really don't want the newsletter, I really don't want to pay that money, Rory will reimburse you. So don't worry about that. Unless you want to stay aboard, we are not going to say, tough luck, we're keeping your money. We just don't work that way. So don't even concern yourself with that. So listen, everyone, thank you so much for giving me your time. I hope to see you aboard. My goal is to make you money with options and to make you money with small biotech. I am doing it with options. We really are busting a move on options. The link to subscribe, Lee. Rory, it's in the chat box, Lee, and you're going to receive it very, very soon by email. But if you look in the chat box, you'll see the link to subscribe. Okay. And I really appreciate, your desire to come aboard. I'm telling you, I do a lot of work to make sure I make you money on this. And I'm in these positions also as a matter of full disclosure. I don't just recommend them, and I don't send out nonsensical hype. I mean, if we get a big bombshell to the upside, I'm going to let it go, but it's going to be real, and everyone's going to be in it. So listen, have a really, really great evening. Have a great holiday. You got 3 days coming up here in South Florida. Everyone's worried about a hurricane, and it might blow us all away. You better subscribe now before the office gets blown down. And I have to send out the alerts from my bunker, my subterranean bunker. But listen, have a really, really nice afternoon and have a great holiday. Take care, everybody. Bye-bye.